Here we go. We have what we call the New York Stock Exchange pre-market in the futures. The time is 5:59 a.m. Pacific Standard Time. Today's date, 7/15/2011. Monthly options expiration will come to an end today. Price action volatility will remain at extremely high levels, both long and short. The upper end of the resistance levels, when they have the sell bar next to the green bar and they start to slide off the top and build weakness, that's when the short side will come in. What will happen on the opening bell in a lot of these names is that their call side of the market will go up in value, they will sell, and the put side of the market that's deflated, inflated calls and deflated puts, there's a put to call ratio. The earnings that came out on Google has definitely given the market a tone on this Friday expiration. Dow Jones are up 40 in the futures, Nasdaq comp up 13.25. S&P, though, on the other hand, only up 3.7 in pre-market futures. Okay, and these are all gaps on the NYSE. It's very long. Now, on the flip side of that gap open, let's look at the gap open down. Here we only have a couple. BHP is in there, you know. So it's very diminishing gap down. That means that the gap open side for the bull side is very long in tooth today. So the trade management, just as I said on the Nasdaq comp, the price action volatility will be at a very high level when you have an options monthly expiration Friday. So as they go up and hit them resistance levels, the buyers aren't there to push it through. They're going to pull back. That's what supports the short-term short sell. So welcome to the Nasdaq comp, or the NYSE and the Nasdaq comp we've already done. You have a very long gap open list. 60% of the trading that goes on in the NYSE is program trading. It's all done electronically. And there are some good names in here and people are buying. PetroChina's up. One that we like to keep all eyes on is going to be Caterpillar CMI, which is not on this gap list here, but the Caterpillar trade has proven to work very well off of the lower support levels. So the price volatility will play itself out on the opening bell. Then as we get into the New York time lunch hour, it will, come down and stocks will set up their intraday support levels and bases and how they're going to move up and down. But once again, the warning is price volatility will be extremely high on this Friday expiration. NYSE pre-market.